we do realize that markets looked a bit overstretched, but at the same time, you cannot just sit aside and not do anything. So one of the things that we have been doing is we've been looking for opportunities on the value side. At the same time, we have been participating in the markets through what we call alternative investments, basically long short funds that can take advantage of this environment. At the same time, we are looking at strategies which are not too reliant just on the stock market. So we're trying to look at alternatives as a way of kind of managing the risk while at the same time participating on the upside on the markets.
Haren, one thing I'm looking at is the slump that we've seen in the US dollar, really highlighting concerns around the US economy and also the economic outlook from this point on globally. But when you look at what's happened with the dollar, we've seen the biggest slump last month in more than a decade. How is that influencing your investment decisions, particularly on the EM side?
Well, what we felt that the dollar would be weaker this year in light of what the US has been doing. The fact that we're going to have a record budget deficit, the fact that the Fed has been very loose, we have negative real rates. I would say that the dollar will remain a bit under the pressure. And we have been, basically investing in emerging markets because historically, whenever the dollar has been weak, we do get emerging markets outperforming in those kind of environments. So the biggest emerging market out there is definitely China. So we've been overweight China since beginning of the year, and that's kind of worked out quite well.